ESAF Small Finance Bank, which is the first management on the show. The deposits climbed 35% year-on-year, but the problem with ESAF Small Finance is the asset quality deterioration. We have Gireesh CP, who's the Chief Financial Officer at ESAF Small Finance Bank, who joins us now to talk about that. Mr. Gireesh, thanks so much for joining us on the show. I want to first start with your asset quality deterioration because it's been a significant, rise in gross NPAs quarter on quarter. Now you're sitting at about 5.2%. Can you tell us why are you seeing such deterioration in asset quality at a time when your peers are doing well? And also, what is the prognosis for FY25?
As far as asset quality is concerned, we have done exceedingly well during the last year. We have done a lot of cleaning up exercise during last year by way of asset sale as well as technical write-off. The overhang of the COVID impact is still in the system to a great extent with all players. And in our case also, it is not different from the industry. So, yes, we have seen a spike in the asset quality deterioration during last 3 quarters. But the pace of, the slippages have come down from January onwards. Okay. So if you see the increase in the last 3 quarters, during the Q4, it is comparing to the previous quarters, it is on the lower side.
So can you give us the numbers, please? What is the slippages now compared to what it was, say, a few quarters ago? And can you also give us a number on the core asset quality, the gross NPAs? Will it continue to be 5% plus? Because like I said earlier, I mean, this is at a time when the economy is doing well. Your entire industry has seen a lot of pickup in terms of whether it's asset quality or growth, but you are still struggling. So can you give us some kind of guidance on what FY25 gross NPAs would be? And also slippages?
See, during FY24 also, this is the initial cut figures where none of the management exercise have been gone through the numbers. These are the initial first cut numbers which we have published. So definitely in FY24 itself, you will see some kind of moderation by way of management exercise, etc. And FY25, definitely there will be a substantial reduction going forward, given the fact that the pace of slippages have come down.
Okay,
all right. Give a precise number now, but definitely going forward, we will definitely see a reduction in numbers.
Well, when you join us post your results, the quarterly results, maybe we could try to get a number out of you. But what you indicated qualitatively now is that maybe things should start improving from FY25 onwards, and we'll hold you at that. Give us a few more details. What kind of a credit cost should we be working with for the coming year? And also, how do your NIMs shape up? Because we have seen that NIMs have been holding around that 11% odd mark. Give us a broad guidance.
Yeah, 11% NIM, even with these kind of slippages we have seen. If you see the deposit cost or the funding cost, it has already moved by around 100 basis points over a 1-year period. In spite of the fact that the cost of funding is increasing, we were able to maintain the NIMs. So next year also, we are comfortable with a NIM of around 10% around going forward as well.
Okay,
now
all
the
right.
funding cost has already peaked out, and we don't expect that any increase in the funding cost side going forward.
So NIMs of around 10% is what you'll be looking at working with. Great, we got that. Also, what kind of an AUM growth should we be looking at? I think your current book AUM is currently around 19,000-20,000 odd. What kind of a growth should we be looking at in FY25?
Yeah, the GDP growth also is expected at around 7% levels for the coming year as well. So historically also we were growing around 35% or more than that, despite whatever adverse side comes in the business front, etc. But we are giving guidance of minimum 25% growth going forward.
Okay, just want to quiz you yet again, if you could give us a rough slippage number. You said it's improved in the past quarter, right? So don't give us the absolute number, but at least tell us by what percentage has it improved. From January onwards, it's improved. So what was it, say, in the December ended quarter? January saw some improvement. As of now, how do you see that panning out?
This this aspect, since it is a precise number or a color of slippage, ratio, etc., we will give it post-result interactions.
Okay. Can you tell us on the margins you mentioned briefly, but can you also tell us the incremental cost of funds versus what the average cost of funds are?
Yeah, the incremental cost of funds comes to around 8%, over 7.75 to 8% as of now. And we have reduced the term deposit interest rate recently by quarter percentage. So this will definitely give some cushion on the funding cost going forward. So now we feel that the running cost is peaked.
All right, we'll leave it at that. Thank you, Mr. CP, for joining in and talking about ESAF Small Finance Bank.